The world needs more than it can build. That is the latest message out of Hines. It's one of the world's largest privately held real estate investors and managers. The company's mid-year outlook shows a softer leasing environment in U.S. apartment, industrial, and retail real estate, but says that selective opportunities remain despite supply constraints. Joining us live in studio, I'm pleased to say, is David Steinbach. He is global CIO and a managing partner over at Hines. David, great to see you.
Nice to be here. Thanks.
So square that circle for me, because, you know, we've been talking about supply constraints across the real estate landscape on this show, I mean, for months now at this point. You would think that, you know, when you have that constrained supply, that it would lead to a broad rebound when it comes to leasing, but you're saying that's not necessarily the case here.
Yeah, there's real interesting dynamics happening right now in the market. You know, I believe we're in an era of some supply shocks, and we've already seen that the last few years in different ways. I think that's going to continue the next few years, and there's a lot of reasons for that, right? I mean, different nations are trying to build their own national resiliency in different sectors, and that's alone creating some scarcity of product across the domains. Also, what's happening is there is a spread, a development spread that's not there, and investors are looking for a premium to justify new development. And so, while the market needs new development, the spread isn't there to justify it, which means that's not happening. And that's a problem that's going to compound, and it's going to drive rent growth near term, and then longer term, it's going to be draft into more of a development opportunity as the cycle matures.
So, a question of timelines here. Well, talk to us about where you're finding those selective opportunities when you take a look at the opportunity set as it exists right now.
Well, certainly, look across the world, and Hines is active in about 30 countries around the world, in Europe, Asia, the United States, and into the Americas. And we're seeing different domains of demand certainly pick up. I mean, certainly, as we've been talking about today, AI is built on real assets, and real assets are going to be needed to support this, surge in spending that will continue despite what might be happening on Wall Street with different, the different AI chip makers. There's still such pent-up demand there that will continue. Certainly, we're seeing other sectors are continuing to drive interest. Logistics, there's still a lot of demand. Retail is a sector that we've been tracking for a while and been making some very selective buys, but that continues to be interesting globally. Certainly, living has been a category that investors continue to be very interested in. It's first in, first out of a cycle. And finally, office is something where investors were more focused on credit. That's beginning to draft into equity now. Yeah. So we're starting to see equity opportunities there.
But with regards to leasing trends, or I guess more importantly, rent collection trends in terms of what you can get for an investor, from an investor's perspective, which one of those areas is providing a little bit more of an attractive opportunity than the others?
Well, I think some of the dynamic goes back into supply because because where we're active in is some of the best space available, and we have not had any issues with collections on our side, and certainly that's something that we're seeing pretty durable through the market. But again, some of that has to do with where we play in the different sectors, and so we're in the highest quality. So we've not really had a lot of issues there. It's really been more about a dearth of supply, and the fact that even if you get that space back, you're able to relet it at rents that feel good.
I am curious about that, particularly on the AI side. There has been some talk about, particularly with data centers, that a lot of the way that they're being built almost as single use. That the idea that if for some reason that data center isn't needed, or the capacity or the demand, it doesn't necessarily match up to the capacity, that there really is nothing else you can do with it, at least that would be cost effective. Is that true, or is that just a mischaracterization?
I think that the data center sector, I think, is still early innings on a lot of evolution that's going to be happening. I mean, a lot of people have analogized it to the electrification of the economy, right? As the electricity kind of came into the system, it not only drove productivity, but also changed in the way it was delivered. And I think that we will begin to see intelligence to be more of something that's bought, on a almost per kilowatt basis, and so that will evolve how different users are buying it. So that all of that's ahead of us. I think this curve is quite deep and long, and so I think when you're making decisions in the here and now, there's still a lot of room for future growth to build into what might be obsolescence in the near term.
Well, when it comes to AI and the build out that we're seeing, the point has been made that there's a comparison to be made to the fiber build out of decades past, and the concern is out there that we could be witnessing what will prove to be a massive overbuild. And I wonder, what your thoughts broadly on that are.
I disagree. I think that, as we've seen in so many other sectors, when things come into the economy that are these productivity boosters, it just drives more consumption of that thing. And so I think that, while there might be some fits and starts, just in the micro, you can't ignore the macro. And real assets, the thing that is supporting this, is a long-dated business. These are bets that are 5, 10, 15 years in nature in terms of what you're building. And I think that the use case there is so deep and long. I'm not worried about it personally.
But I mean, and not to keep harping on this though, but when you talk about sort of the long-term nature of what you do and what your peers do, I mean, I would think that makes forecasting, for lack of a better phrase, a lot harder, because I mean, it's easy to look around the corner and maybe say, okay, where's the economy going to be in a year? Where's it going to be in 5 years? Where's it going to be in 10 years? How do you insulate yourself from, I guess, the unknowns?
Well, I think that is part of investing in real assets more broadly. And I think that you get into supply demand constraints. You get into how difficult it is to build. I think even in things like data centers, we're seeing it's getting more and more difficult to build. Not only is it power, which is what we've been talking about for years, but now it's increasingly communities. And so those are increasing restraints.
Are you worried about that? I mean, we just had, I think our governor here just said she was going to do a moratorium on data centers in New York State.
These things are normal in my world. And certainly Heinz's organization, this is what we do. We navigate these complexities because anytime you want to build anything in any major city around the world, there's normal
there's always
difficulties in doing it. Right, there's always
but doesn't this feel a little bit different? I mean, this isn't, there's so much backlash to this, whether it's justified or not, that's a whole other conversation. And we're in an election year, so you have a lot of politicians that are going to want to, tip their hat to it. And it's not just New York. It's not just, one side or the other on the aisle here. It's kind of across the board.
I think it's new for this sector. It's not new for the industry. Okay. And so I think that's what the market's digesting a little bit. It is new for the sector, and they're not used to that. They're used to building these data centers out in far-flung places, and this is something I think will continue.
All right, David, great to have you here. David Steinbach, Global CIO and Managing Partner over at Heinz.